The first thing to look at is the sector performance. We have all the top sectors here, and if you have seen my videos, this is one site I go through just to understand how the sectors are doing. I've been listing out past 3 months, last quarter's performance, and the top one is the healthcare sector. Right now, all healthcare companies have been performing. It's There's nothing new in that sector other than the weight loss program, which a couple of these companies are dominating. We'll go a little bit deeper as we go into every sector. But that's one big topic right now in the healthcare sector, which is the weight loss program. Seems to be a big hit right now. The major players are there, like Eli Lilly, Novo Nordic, and other companies who are introducing some weight loss medicines, drugs, which are helping the normal people to bring down some of their weight. That is one thing which is dominating in the healthcare sector. Other than that, the rest of the companies were all the regular, normal companies. They have the standard generic product or specialized product. They've been performing the growth in that in the respective areas. But why the healthcare sector is growing? Investors are basically they're looking at saying, okay, what's the alternate industry to go invest in where we can go potentially get a good growth. That's how investors are looking at now. Looking at the other sectors are somehow tied up to the economy, but the healthcare sector is always in a growth path because every individual needs medicine when they get into sickness. So that's going to perform consistently. It's a slow growth, but some of the big time companies on the weight loss program are generating more revenue there, and that's why you see a good growth in the healthcare sector, followed by information technology, which is again significant. It's not a significant growth, but it's a 5% growth in this last quarter. Financial is followed by that, which is 3%, close to 4%. Industrials and materials are the rest of the things. Rest of the industries are just surviving in this market right now. And basically, the market is in the sideways movement right now. That's very evident past 3 months. Since November 13th onwards, we've been seeing some downwards trend in majority of the sectors, majority of the industries. Um, the one sector, which is the healthcare sector, is kind of an exceptional performance there. So this is kind of a sector performance, but when you go a little bit deeper into it, who are the top performers in the healthcare sector? As I said, Eli Lilly is one. Charles River Laboratories, they're basically a normal company. Regeneron Pharmaceutical, they're a bunch of the top players in the healthcare sector. So they've been performing, and investors are putting money there. That way, it is just growing. Is there a significant products in those companies? They have their own products in their lineup. Those are performing well, and investors are investing more money into the healthcare sector as an alternate sector for IT, where you can see the growth. So that's how the current trend is. We'll go a little bit deeper into every one biggest question every investor is asking right now is that where do we invest money right now? Okay, because the market has been not performing well. It is mostly sideways movement, which means that it is not appreciating as well as it is not in a downward trend, negative sentiments. So it's kind of in a sideways movement, which means that it is just balancing out both the news, positive versus the negative news, and then it's in a sideways movement. In this particular time, generally we look at individual performers. If you're following the trend kind of path, then find the market things which are kind of the industry or sector which is performing right now. As I said, the healthcare is one area where you can go invest in some of these big time companies on the weight loss program. Um, their targets have actually significantly increased in the past quarter. Big time analyst companies have come back with the higher targets for some of these companies who are dealing with this the weight loss programs. So that's one area to look at it. IT outside healthcare sector, IT sector is another second top growing one. I think the primary news there is the AI. AI is dominating. Every company which puts the tag as AI right next to it is performing well. The price appreciation is there. Is that real? As an investor, if you want to think deeper into this one, right? Is AI going to survive, or is it going to sustain longer, or is it going to be a bust, right? So, if you dig deeper into it, it comes down to how AI is going to be utilized down the line by all these big time companies like Microsoft, Apple, Google, Nvidia. Going back to us, if the AI getting utilized in a right way, for example, to improve the productivity of an employee, if a company buys Microsoft product or a Google product where AI is infused into it, then if it helps that particular company to improve the productivity of the employees and that's a kind of a win-win situation for both the company which is promoting this AI product versus the company which is consuming the AI product. So that's going to be the direction. So we should look at this IT sector. Don't consider AI as a bust. Instead, look at some of these companies, how they are coming up, what type of products they're coming up with AI. Agenting scenario is another scenario to go a little bit deeper. Some of those automations, utilizing AI to automate some of those workflows are going to help these consumer companies to, to, to perform at the high level and take away some of the waste in their processes. And I think if you hit that sweet spot, using the agents and improving the productivity of the employees as well as removing the waste are the key indicators for the IT sector to survive long run with AI. And I don't feel like AI is a bust. It's more of how these big time companies are going to come up with the right set of products to improve the productivity of an employee when they're consumed. That's going to be the trend. So look at some of these companies like Microsoft. uh, Google is coming up with Gemini stuff, Microsoft with the Copilot stuff, which is now integrated into all the Office products and all productivity products. Same thing the Google is doing. um, Facebook is coming up with a bunch of other products. All the big time companies are bringing up the AI into their productivity lineup. So watch out for those IT companies. You should see there will be a little bit of dip, and then whoever uses the AI in the right places, which could generate revenue, should bring the price appreciation back again, the demand again in the IT sector. So currently, it's in the sideways turn. Watch out this particular sector. This has a potential. We have seen for past 2 decades that this particular sector can turn around very fast compared to other industries. First thing to start off with the discussion is the spider ETF to just analyze what the market is going through right now. Looking at some of the trends, if you have seen my previous video, I've just left the support and resistance as is. In my previous videos, I discussed about it, and I kind of predicted some of the trend lines too. If you have seen the May videos, the trend line is what I predicted. Things are moving in the same direction. That's how the market was performing. But off late, what is the current state of the market right now? Looking at the spider, all the big time companies which are part of the S&P 500 have been trending in a sideways direction. In the sense, they are going in a cautious direction right now, based on the economy. Right now, all the data shows that some kind of negativism is there, or generally investors are staying outside. They want to see how the market is going to trend. And for now, since October, the trend is in the sideways direction, which is basically a churn, sideways churn. Uh, we're looking at the resistance level is around 690, support level is around 650 range. So within this 40 points is what the trend is going to be for the next quarter. And if I can analyze what is going on in the market and highlight how the S&P is going to perform, what I'm seeing is that for the next quarter, the trend is going to be the same. It is going to be in the sideways movement. Anything beyond 690, breaking the resistance point, would be a good sign that you would see that the market is recovering. So watch out for anything beyond 690, and if it is consistently staying at that above 690, then you could consider that as a reverse in the trend. Basically, there is a change in the economy. So that could basically tell us that it's a time to invest slowly, get back into the investing mode. If you don't cross this 690 mark and the price movement is within this 40 points, then just staying away, watching the market would be a good thing to do as an investor. So I personally, as an investor, I look at the spider. It's currently in the sideways turn. So my approach is going to be just stay in the sideline, watch how the trend is going to go. If it goes up 690, then that's a point I could say that, hey, consistently, if you see the price is above 690, then good chance that there is a reverse in the trend. The sideways turn is over. Now the market is picking up. Right at that time, I go look at some of the sectors where the growth is like 5 days, 10 days, a month growth, and then identify the leaders and then invest in those companies. So that's how I see it. The first stock which we wanted to discuss is looking at the healthcare sector. One of the high performing stock is this Eli Lilly. They have introduced this weight loss program drug, which is an injection called Zepbound, which is currently performing very well in the market. It's been prescribed by all the doctors right now, and I think people are taking advantage of this good weight loss program which this company has come up with, and it has actually shown the trend with what you're seeing right now is some of these weight loss programs are actually turning into a good money making system right now for them. and I we could see that the trend is very good, close to 50 percentage. It has grown around 45 percentage in yeah, in this 12 months period. There are, even though the market is in a negative trend or in a sideways turn, this stock has been performing very well, and it has hit the peak, which is kind of 1112 something. And off late, because of the market condition, it has did some negative trend too. The lowest was, the support was around 990, 960, 970 range, which I would see that as the support level, and the resistance is around 1110, so kind of 1110, which is what I see the resistance level. It is above. If you look at the trend of late, the price movement is above 10 days, 10 days moving average. It's about 20 days moving average, 50 days moving average. So it's everything aligned perfectly for a good price movement. We should see the price movement a little bit on the sideways turn, because on the RSI level, it has not hit the peak yet. So it is on the sideways turn. You might see a little bit of dip and then coming back again. Again, there are competitions coming up here. Novo Nordic is also introducing, has kind of got the FDA approval for its new drug, weight loss drug called Grow. That's also in getting into the market right now. That's not an injection based; it's more of an oral based medicine. So it's going to be a good competition there. So we should see which company is going to perform. So watch out for Novo Nordic also. That has a good product coming out in the market, weight loss program. It depends on the efficacy of these drugs, and and based on that, you know, we should see the trend lines changing here. Either the competition is going to keep the price within this range, or just spiking up above 1111, or and above that price, or you might see the trend moving in this direction. So overall, this stock has been performing well, significant. So the targets have been changed also by the analyst. They're looking at 1500 as the new target, highest target. But if you look at it, I'm looking at somewhere around 1200 is the a very decent target for this particular for this particular stock. So we should see hitting close to 1200, and then moving in the sideways direction. And then if the drug performs well compared to the competitors, then you might see the breakthrough for 1200 and then going up to 1500. So if you look at it, if you visualize this, it's kind of a step model. First, 1200 is the first step, and then breaking that 1200 mark, and then going up into 1500 range. So that's how they trend for this particular company. Company is a very good company here. So watch out for this particular drug and its performance. So if you're investing, the price is very high right now, but you could probably buy a smaller chunk of this stock. Quick check on the company Novo Nordic. This is another company where the weight loss program has been introduced. They have introduced a new drug which recently got FDA approved. Looking at the trend, the company has been in a negative trend for quite a long time, since 2024 onwards. It's in the downward fall, and what this new drug is going to help it basically going to reset some of those expectations for this company, and it's a good healthy competition for Eli Lilly. And I believe if that particular drug has the right efficacy, then good chance that we might see the growth coming back again to this company. So they are betting on this particular drug heavily for sure. FDA got approved, so we might see the price movement going up. So the next stop, which I look at it, is around 5960, is what the point where, if it hits that point, then that's the point we could say that, hey, you know what, there's a chance that this is in a reverse direction, in the sense it has reset the price, and the price is going to appreciate from that point onwards. So I'm going to closely watch on this Novo Nordic. So if you are investing in healthcare sector where right now the money is, or money is flowing in, look at this particular stock. And I think the weight loss program is a big hit in this sector. So watch out for this company. The price could potentially could come back. I would say first stop would be 60. Second stop, you're looking at around 80. Third stop should be 100, then it should get back. If the drug performs well, then it should get back to its older price, which is kind of 120, 130 range. So the current trend doesn't show clearly what the direction is going to be, but we have to wait and see how that the FDA approved drug is going to show up and generate revenue for this company. So watch out for this. Keep this in your watch list and monitor the price movement, and see if the price. The next stock we want to talk about is the company called Visi Properties Inc. Now, if you have seen my previous videos, and I've been a big promoter of a fixed income or dividend based strategy, and you have seen it, my past 1 year videos have been showing my dividend growth. And if I've convinced a couple of my viewers to be a dividend based, then this is one stock which I wanted to share here to support some of those dividend strategy too. This is a company which is classified as a real estate investment trust company, RETs. The dividend is for from this company is around 6 to 7 percentage. Consistently, they have been giving past 7 years. And what this company does is primarily they deal with a bunch of properties. They are in the real estate business. They basically have uh, kind of gaming, hospitality, entertainment, and leisure properties, renting them off. Some of the big time names are the Caesar Palace in Las Vegas. MGM Grand is another one they own right now, the property, and it's been leased to MGM. And the Venetian Resorts, Las Vegas. Some of these Las Vegas properties, these three Las Vegas properties, close to, they've been performing well on that front. Generally Las Vegas casinos, there will be always will have a demand. So some of those properties have been leased by them. So they own the property, give it to these companies to utilize those real estate. And at the same time, if you look at it, they have around 60,000 hotel rooms. To diversify, they're also looking at some of the healthcare areas where we're leasing their properties for healthcare division, as well as some of the sports related activities too. Some companies who are related to sports facilities, they're leasing some of those properties, other properties to these companies. So just to diversify, not just uh, relying on the casino related stuff, they're also diversifying their presence in other sectors, in the healthcare sectors and sports sectors where growth is significantly happening. So they are primarily real estate investment trusts. How they survive, basically they lease these properties to big time companies, and they earn a steady fixed income from in terms of how these companies paying their rents and property lease and other things, right? So that's the income they are getting, and that income in turn distributed to all the investors. So you will have a steady growth here. Looking at the chart right now, if you look at it, it is in the sideways churn. Definitely, there is a fixed income, and we should see since 2022 onwards, it is always in the sideways churn. They are betting heavily on the lease amount which they receive from some of these big time renters. So their growth is going to be in this sideways model. Now, if you look at the trend, anywhere close to 28 is a good place to invest right now. It's actually in the right place to invest, to buy, and growth is going to be the resistant level is around 33. So you could buy at 28, sell it at 33. So you can consistently do this one because it's a more predictable system they have, and you can see since 2022 the growth is pretty much the same thing. So if you bought stuff at 28, you could probably sell it at 34. So you have close to 4 points growth. Similarly, I could see the same trend here. So from the predictability standpoint, the price movement is very predictable here. It is currently in the downward trend again. It should pick up based on some of the earnings report, which is going to come later early next year. So watch out for this company. So from the dividend standpoint, they are around close to 7%, and they've been giving past 7 years consistently. So this is a good sign. If you're a dividend-based investor, this is a good company to invest in. Buy in a smaller batches. That way, whenever there is a pullback, buy. And I believe that the trend should change. It should kick in, and anything hits 28 or 29 will be a good buy point for us, which confirms that it is coming back into that support level, and there should be a spike and then pull back. And if the price stays within that 29 level, then good chance that the price movement is going to go up. From the moving average standpoint, right now the price is lesser than this. So you could see the price is actually kind of in the below 10 days, 20 days, and 50 days moving average. So currently it's in a negative trend, and they are the recent closing price movement is actually coming back to the 10 days moving average, 20 days moving average. So if it crosses that and crosses the 50 days moving average, then good chance that it is in this trend. So I kind of highlighted the trend here. So it should go back, come back again, and the price should just go back to its normal top, which is close to $33. So watch out for that. They pay you good dividend if you have invested money. Um, some of the dividend-based stocks are like you won't see a big spike in their price, but it is a steady growth, and it is more of a predictable growth. Your money, your principal will not go away; it will stay. but it depends on how where you invest, at what point you invest. Right, this is a good point for us to invest, and then the trend should go up. When it hits 33, you could basically take out your money also. But if you feel like you can stay in the market for just for the dividend purpose, you can keep your investment as is. There's no big difference there. But I would recommend taking the profits when it hits that close to 33. That's a good place for you to take the profit, and then wait for the price coming back to 28, then invest back into it. So it's more of a predictable stock. This one is, that's why I like this stock, because it's more predictable. You could follow the trend. You know when to enter, when to get out. So this is the best mechanism for investors to invest in, where you have a predictable model. You know where to enter, where to get out, and paying you a good dividend. Looking at some of the technicals here, you could see that the moving average, obviously the price is below the moving average. It is touching back again into the moving average. If it touches and goes down, good chance that the negative trend is continuing. So wait and watch how the price is performing there. Now, based on the trend, if you look at it, anything beyond that is a good buy point, and we should see the trend coming up also. So watch out for the price movement. It is a key for us. When it touches that 29 is a good sign that the trend actually changed. So, and from the demand standpoint, the demand is pretty low right now. You can see that RSI is at the lowest of the range right now. It's within this lower band range. It is going to be performing the same way until we should hear some good earnings in their earnings report. So it should basically be in the lower level, and then the demand should slowly pick up as we cross the early next year. So the first quarter of the next year. So watch out for that RSI too. From the stock standpoint, they have a fixed income, and they're distributing that money to the investors. Thanks for watching my video. Stay tuned for more updates, more interesting topics to cover in the future. Until then, stay invested. Thank you.